Against the backdrop of the brutal hurricane season that was 2017, this forum is timely and its theme, financial resilience and debt management, is most apt. Damages from Hurricanes Irma and Maria are estimated at around 5 billion EC dollars, at just under 2 billion US dollars, in 5 of our countries: Anguilla, Antigua and Barbuda, Dominica, St. Kitts and Nevis, and Montserrat. Our member countries are still recovering, and some will be in recovery for a long time. The Eastern Caribbean Central Bank is a unique monetary and banking union centered around the core goals of maintaining price stability through a fixed exchange rate and financial stability. The credibility and sustainability of this arrangement depends not only on the availability of foreign exchange. As you know, we maintain a very high backing of the EC dollar with foreign reserves. Right now it's around 97%. But it also depends on sound fiscal and debt management policies. And there is a nexus between monetary policy, which is essentially the fixed exchange rate regime, and sound fiscal policy. Accordingly, as one of the 5 goals in our recently launched strategic plan, 2017-2021, we have committed to being the advisor of choice to our participating governments in the pursuit of debt and fiscal sustainability. And I want to encourage those of you who have not yet seen the strategic plan of the Eastern Caribbean Central Bank to visit our website. There you'll find it. And I want you to not just read it and familiarize yourself with it, but I want you to become an implementation partner. The theme of the strategic plan is transforming the ECCU together. It's a big undertaking, and we need all hands on deck. We need you. Given our bank's strategic focus on this issue and the imperative of building resilience, we immediately accepted the invitation extended to us by the Paris Club to host and co-chair this forum. Now, at this moment when we convene, there are several concerns attending. Many, in fact. They include climate change, rising geopolitical tensions, and I know we all watch TV, policy uncertainty in advanced economies, threats of protectionism and trade wars, and the global mood is somewhat uneasy because of, notwithstanding the uptick in the global economy, there are concerns that some of these issues can in fact undermine, derail the strong recovery that we have seen certainly this year and projected for next year. While most of the Caribbean has now finally emerged from the recession induced by the global financial crisis, our growth performance remains well below what is needed to bend the curve on poverty and high unemployment, especially amongst our youth. And for our visitors who don't know the region well, do not let the per capita income levels fool you. There's poverty in this region, and there's high unemployment, especially among young people. In the ECCU, unemployment averages around 24%. And within our youth, it is double, so it's almost 50%. That's a Caribbean reality that we are grappling with as policymakers and implementers. And again, we want you to appreciate our specific circumstances. We cannot and will not settle for a new normal of subpar growth. As a consequence of the hurricanes last year, the ECCU grew by about 2.2%, well below our initial projections before the hurricanes. This year, we expect to pick up somewhat and grow around 2.7%. And next year, as the momentum of recovery gathers pace, we expect to grow by around 3.5%. 2.2, 2.7, 3.5. What's our target? 5%. And why is 5% important? Because we believe at 5%, with the right policies, we can have inclusive growth and address the issues of poverty and unemployment to which I just alluded. Now, let me say a word on building resilience. In the words of Prime Minister Dominica, the Caribbean is at the front lines of climate change. As part of our regional response, the Caribbean Community, CARICOM, has declared its bold ambition for the Caribbean to become the first climate resilient zone in the world. And accordingly, Dominica is leading that charge, Dominica being the most devastated from Hurricane Maria. So what is resilience? Resilience essentially refers to the capacity to withstand, adapt, and rapidly recover from shocks and stresses. I want to repeat. The capacity to withstand, adapt, and rapidly recover from shocks and stresses. Caribbean people are resilient. However, can we say our public finances are resilient? We cannot. We cannot. We must grapple with several questions, including what are the preconditions necessary for ensuring a robust, resilient fiscal framework? What are the impediments to building financial resilience? What can we do, countries, creditors, and partners, development partners, to support our countries to build resilience in the financial sector? At the ECCB, our support to our member governments has been in the form of advice in the area of fiscal governance, and the Monetary Council, the highest decision-making body of the central bank, has set a target debt-to-GDP ratio target of 60% by 2030. 60% by 2030. At this moment, our region, ECCU, that is averaging 70%, 70. And we made significant progress from 5 years ago when we were around 85%. However, because of the recent hurricanes, some of our countries are going to see some reversals in the fiscal accounts because some of them, already highly indebted, have to take on more debt. As this was not bad enough, the high debt, some of our countries have now been classified as too rich to access grants and concessional finance, otherwise known as official or overseas development assistance, ODA. I have said it before and I reiterate it today. It is an analytical absurdity to assess our small island developing countries merely on the metric of per capita income. One of the first things I learned in university when I started development many years ago was that one size does not fit all. And that is very true of per capita income. You cannot use per capita income as a major and sole criterion for determining access to concessional financing. You're going to get it wrong every time, all the time, especially in small states. You take the case of Dominica, 200% of GDP, 200%. In fact, 226%, financial secretary, if I recall. The whole country, the whole country. This is not a region, this is not a parish. This is not a constituency, the whole country. Per capita income cannot give you an effective analysis of that situation. And so we strongly encourage development partners to consider vulnerability as a key matrix and criterion for determining access to funding. As we speak, several of our countries, Anguilla, Montserrat, are having the challenge of accessing ODA. And the countries like Antigua and Barbuda and St. Kitts have been graduated, so they're not eligible. And countries like Dominica have some eligibility, but it is limited and well below the demands, the needs for financing their recovery. And so I urge you to consider this point very seriously. In support of our member countries, the Eastern Caribbean Central Bank is promoting and is a strong advocate of fiscal resilience legislation. I have gone across the region, up and down, and I continue to be a strong advocate for fiscal resilience legislation, sometimes referred to as fiscal rules, other times as fiscal responsibility. I think in the context of resilience building in the Caribbean, I much prefer to frame it as fiscal resilience, because as I put it in cricket analogy terms, you cannot make runs if you're not at the wicket. So you have to give yourself a chance. And for me, fiscal resilience is a fundamental foundational pillar on which to build our economies and to weather the shocks and to build resilience. And so we continue to advocate for that. 2 of our member countries already have such legislation, Anguilla and Grenada, and we are discussing it with other member countries. And if you look at our strategic plan, you will see that that is enshrined there as well. We do a lot of work with our governments on government securities through the Regional Debt Coordinating Committee, which is an oversight body for regional government securities market. Now, what can our partners do? So I already mentioned to you that I'd like you to be more sensitive and more analytical in terms of how you assess access to financing, use vulnerability more, use per capita income less. But there's one other thing, or maybe a couple other things I'd like you to consider. The second one is the inclusion of an automatic standstill clause in all debt agreements. The inclusion of an automatic standstill clause in all debt agreements. As some of you may be aware, Grenada negotiated a standstill clause with the Paris Club in November 2015. How could I forget? Negotiations started at 11 a.m. and ended at 6 a.m. the next day, all day and all night. At that time, that was a landmark development. And I acknowledge the Paris Club's contribution in helping us to get there. But having said that, it is not automatic, and I need to say that. The clause provides for us to come to the Paris Club if there's a major event of a certain magnitude and request a standstill. Now, one assumes that such a standstill will not be unreasonably withheld, such a request, but there is no guarantee. I am calling for a guaranteed standstill clause, such as we negotiated, at the time I was NFS in Grenada, Financial Secretary in Grenada, that we negotiated with commercial debt instruments in 2014 and 2015. Essentially what the clause said is that if you have an event of a certain magnitude, there will be an automatic standstill such that there will not be an event of default. Now, why is this important? Why is this important? Some of us know only too well the trauma and turmoil in the aftermath of a major natural disaster. In small countries like ours, where the revenue base of the country is severely undermined, and the burden of technical leadership falls on a disproportionately on a few capable persons in the Ministry of Finance, and I see some of them in the room. After an event, it's absolutely the wrong time to embark on such negotiations. And I know that's from experience, because I went through Hurricane Irma in Grenada in 2004. It is not the right time. You are dealing with issues of revenue loss, you are dealing with emotional loss, you are dealing with how you get the country back. All eyes are on you, and it is timely, time-consuming, and expensive to then begin a process of negotiation for a standstill. Given what we know of the Caribbean, the storms will come, and the shocks will come. We have to be prepared. And part of building resilience, in my humble estimation, is to put those clauses in place and work them when they need to be worked. That is, you have a major disaster or major shock. And so I call today to the Paris Club, all of our development partners, and this is something we want to say to our heads of government at the Commonwealth meeting. That's something we want to say at the spring meetings. We want to reiterate this point. I call for an automatic standstill clause in all debt instruments for countries in small island development states. I believe it's an important development for building resilience and ensuring that we are better prepared to address these issues. As recently as the 26th of March of this year, the Financial Times reported that the managing director of the IMF, Madam Christine Lagarde, proposed the idea of a rainy day fund for the euro area. Now, if the IMF considers such a fund as a useful device for some of the world's wealthiest economies, we may well conclude that the Caribbean could use what I call a stormy day fund. A stormy day fund. So, to support our region's resilience efforts, building efforts, the ECCB has commenced work on the establishment of a growth and resilience fund. And we are open to collaboration with the fund and the bank, World Bank and CDB, on this work. This fund would complement national instruments such as the Contingencies Fund and the regional instruments such as the Catastrophe Risk Insurance Facility. In addition, resources mobilized at the country or regional level, the fund would need to tap the much promised but not yet seen climate finance agreed in the Paris Climate Accord in 2015. It bears repeating that the Caribbean is among the lowest emitters of greenhouse gases, but among the hardest hit front lines of climate change. So, I want to encourage our development partners to consider how they could come alongside us and work with us in this particular regard. A moment before I close on building capacity for debt management in the ECCU. With assistance from Canada, the ECCB has hosted a debt management advisory service unit to deliver technical assistance to our member governments over the past 8 years. We are grateful to the Government of Canada for its sponsorship of this project. And of course, we've also collaborated with the International Monetary Fund when last year we had the Junior Debt Managers Program for 6 months, where we brought debt managers up and had them train at the ECCB and then have them redeployed back into their countries. Very important dimension as well. This project has had tremendous value to our governments in enhancing debt management capacity. And even as we come to an official close soon, the ECCB has taken the decision to institutionalize the unit's functions here and to ensure that we continue to offer that service from the ECCB after the project officially concludes. And now I conclude. As borrowing countries step up their efforts to attain and preserve debt sustainability and financial resilience, the support of creditors and partners must be steadfast and unwavering. I again thank the Paris Club for the initiative we have today and for all the development partners and countries that have joined us. As we dive into the business of the day, let us be energized by the greater purpose of our efforts here. Really, folks, achieving financial resilience is not the end goal. Rather, our ultimate goal is sustained and shared prosperity through the socio-economic transformation of our region. We are united in this purpose, so let us freely share our views and our ideas as we work together to build that management and resilience. I thank you, and I look forward to a very stimulating day's discussion.